We're live.
Welcome, everybody. This is Tesla Beat number 17, and we have a good one for you today. We got Tesla Boomer Mama with the regular squad, John and Jeff here. Welcome. And the special guest number 2, Gary, the main man.
All right. Well, it's been, of course, never a dull moment. I think last week we ended, and then the next day, the first produced Cybertruck came. But we'll get into that a little bit. Obviously, that was covered a little bit on the earnings side. But obviously, the big call out obviously is the earnings call. And we'll talk a little bit, partially why we brought Gary and even Alexandra is really just to talk a little bit about the runoff that happened. As we've had this huge rally, especially over the past 6 months. It's up 80% over the past 6 months. I think month to date, it's essentially down almost, just because again, it's had a pretty huge run over the past couple months, really this quarter. So we will get into that, but let's just get into earnings. I think let's, maybe what we can do is let's start with the regular hosts and then Alexandra and Gary, because I know obviously you all have been discussing this along with obviously I know Jeff as well. But let's just get everyone's thoughts on the earnings, just the major things that stuck out to you, and let's go from there.
I will say that for me, because I'm the novice here, things that stuck out to me were, well, of course, the major OEM with the FSD. I think that was a major call out. And non-Tesla related, I'd have to say the Neuralink connection to Optimus was like huge. Mega packs, and the fact that the energy business is just growing. I mean, knowing that some of those contracts aren't fulfilled until they're actually 100% completed, and looking at what they have projected as coming down the line, like, holy cow, that's going to hit the bottom line in a major way over the next year or two. So, I mean, those were couple of the biggies for me.
Yeah, I'll go next. Thanks, Joe. For me, the big takeaway, and I tweeted about this, is the fact that their COGS reductions have now begun to keep pace and even potentially overtake their MSRP reduction decline, and that's a big move, and I expect that to continue. I expect them to continue to do both significant event-driven reductions. These are things that Tesla does on their own, agnostic of commodities, their supply chain, their factories, and their engineering teams do. And then I expect them to continue to experience commodity declines. If you look at the various commodity indexes and you look at where they're at, they're all trending a bit lower. And the China reopen is a bit slower than expected. And, it looks like these commodity declines will continue. And Tesla is doing a great job of actually capturing those opportunities. They had both of their supply chain leaders on the call that are responsible for doing that. And they're doing a great job. So that was, to me, their COGS decline was a big takeaway. And then the other big thing for me, Joe mentioned the FSD licensing. That was huge. And then finally, the comments on being a top 5 in compute resources. Elon outlined, you need talent, data, and computer resources to do AI. And for them to be a top 5 by this time next year, and who knows, I mean, it could be top 3. That shows you that, they're solidifying themselves, and they're letting the analyst community know that they're an AI company.
I'll go first, Gary, because I know you've got much more. Oh, you want to go first, John?
Oh, okay. Yeah, you go for it.
So my biggest, like for Joe and Jeff, was the licensing with a major OEM. We've been speculating who that may be and how soon or how early that is. The second biggest was actually just a plain number. In revenues being at 25 billion per quarter now, I just think we all have to, hold it for one moment. This is huge, like 25 billion per quarter. This is the first time we're getting very close to that number. You're right, Jeff. The cost per cars, we're on the good trajectory. Hopefully the margins will go up. We remember what was said on the call, and I'm sure we'll get into that with Gary. But it is a good thing that costs come down and have come down significantly. Yeah, those were my 3 big takeaways. Go ahead, John. Sorry about that.
Yeah, no, I would say, obviously, I think we'll get into that with Gary and his expertise on the margin stuff. But yeah, I would just say, it was such a solid quarter from my end. And I know that the stock has rallied a ton. So to see it kind of like cool off a little bit, obviously, right after the earnings, I think everyone's like freaking out, like what happened. But I couldn't have personally seen a stronger quarter, 25 billion, 24.9, 47% year-over-year growth. Especially too knowing that this company is also now they're ramping the Cybertruck, which obviously is going to be burning a lot of cash as well. And they have been spending this, they've been slowly ramping, but the amount of Cybertrucks that we're seeing, especially in the Silicon Valley, it's like when the Model Y was about to go out, right? It's just like they're all over the place. You pretty much just can't go one day without seeing one of them around. So I was pretty, pretty bullish on the outcome, but also too, a couple of other things that I knew were inevitable. And that was the software. I know we discussed that the OEM specifically is going to be licensing, or they're talking to an OEM to license the software. But once the charging standard went their direction, and given how far off these companies are from even being close to really, again, leading the space, which essentially there is no real competitor in the space. It's just a matter of time before the software probably becomes the standard, whether it's for autonomy or even for as another, like instead of CarPlay or Android, the Android version, it's just going to become the next standard. And so, but yeah, and then from a customer perspective, obviously the small things of like the FSD is now transferable. That was a huge one. And then some of the other things too is obviously production being slowed down, which I know we'll get into as well, why that's an important call out if there's any things to be, headwinds to obviously expect from that. But yeah, those were just some of the call outs. Like overall, just feeling pretty confident about, the performance and really where this company is headed. I mean, again, $100 billion of, run rate now. So pretty big deal, but let's kick it to Gary.
Listening to you guys, I think you're all in la la land. Obviously, the stock is down because it was not a great quarter. If you look at the actual numbers, they came in at 91, but you back out that 328 million of FX intercompany account, whatever, it came in right in line. The auto gross margin was 18.1. The single thing that management needed to do on the conference call to make people feel better is to give confidence that the second quarter auto gross margin was trough, and they didn't do it. And instead, what Elon said, which was just, I've talked to so many institutions and nobody gets it, as well. If interest rates keep going up, we're going to probably take prices down again, which, as you know, the Fed's going to be taking rates up again next week. So that's why the stock went down. That's why earnings revisions have been negative for 2 days. The 23 number has gone from 345 to 341. The 24 number has gone from 475 to 471. What frustrates me is that there were so many positive things that they could have talked about. Cybertruck launching is huge, and as you said, in 2021, when Model Y launched, huge volume growth the following year, you had a halo effect to the entire brand. I'm not a big. I told Alexandra this whole thing with having another OEM in negotiation. It's very different negotiating using your charging network versus the brains of your product. And you've already seen Volvo say, "Hey, yeah, we want to be in your charging network, but we're not going to see the ADAS autonomy stuff because that's really, really important. The charging is not that important to us." So I hear people saying, "Well, they got one OEM on the charging network, and therefore they're going to get a whole bunch of people on FSD." That just doesn't make any sense, because one is really important, the autonomy, and one is kind of, think of an iPhone. Okay, if you're using the same charging base, that's not the same thing as using the guts of the phone. So I don't think anybody on the institutional side thought that was such a deal. And Elon has promised this before. A couple of years ago, he said that he was talking to some OEM about autopilot or enhanced autopilot, and that never turned into anything. So for people to hang their hat on that, to me, that's silly. So I came away thinking, okay, the numbers were okay. The call was terrible. And, at this point, the stock being down 10% makes sense to me because the call was so bad. So
what was really bad about the call, Gary?
because there was one thing they had to get clear to people, and that's that auto gross margins had bottomed. And, and everybody knew the quarter was going to be bad, meaning they were going to be down from first quarter. First quarter was 19, second quarter was 18.1. But now you got everybody worrying the third quarter is going to be even lower. And that's what the analysts did. And that's why the stock went down, because people took down their auto gross margin numbers for third quarter and for the full year, because Elon got on and said, hey, we may take prices down again, even though we're in a deflationary commodity environment. So it just, the call didn't hold together. It's like you bring prices down if you think that, commodity costs are going to continue to fall. But I don't quite understand what the need was to say, well, if interest rates go up, and unless he was trying to send a signal to the Fed, which is silly, Fed doesn't listen to him, that we're going to take prices down if you raise interest rates. I mean, do you think Jay Powell really cares about that? Of course he doesn't. So
No,
I
I
just thought
don't
it was
think.
a dumb call. Dumb call.
Well, we can talk about that later. But to get back to your point about pricing, he didn't say we're gonna lower prices. The answer was
warned.
that we can't commit that this will be, not an option. It all depends on two other things, which is the macroeconomy and interest rates and prices of our supplies, right? So I found that not as harsh as you're putting it there. I mean, obviously, everybody would have preferred saying no, we're not, but I don't see the issue with it, because that's exactly what they said in earlier quarters. And I mean, if they have to lower prices further, um, even with the harsh decreases the last 6 months, we're still at 18.1% of gross margin. This is phenomenal, and everybody puts it as if it's really bad. 18.1% is a phenomenally strong number.
That's a
I have a
good
different
number.
rate.
That's not the problem. The problem is not the 18.1. The problem is Elon saying we're not going to commit that that's the trough. And again, if you're an institution and you own this stock, that's the one thing that you were banking on this quarter, and they couldn't deliver. I mean, I'll throw it back to you guys. If you're all so bullish about the call that it was such a good, why is the stock down 10%?
Yeah, I'll take it.
I don't hear that.
Go ahead.
Yeah, I'll take it. First off, I think that's valid feedback in terms of the management of a call. But I think there was a couple of tells for me that I think were key, and if the analyst community would latch onto these. Number one, he said that there's going to be some production downtime for upgrades in Q3. And part of that, where I take it, is that they're actually going to use that. They're going to upgrade their factories, and they're going to improve their output for a bigger Q4. But they're also going to use that to help deal with that part of inventory clearing. Instead of using MSRP pricing, they can leverage the downtime they need to upgrade their lines. Number two, I sent a tweet out that says it looks like Tesla's COGS reductions are starting to come in line, if not exceed, MSRP reductions. Elon liked the tweet. So I think there's a couple of things happening. And the third thing is, I don't think they can explicitly say we're never going to do something. I understand it could have been answered, there's a way to fluff, the everything on the call. I totally understand that, but I hang my hat on those three things. They can never say never. They have the production capacity management. They gave themselves air cover doing that. And three, they've admitted that they're now starting to reduce COGS faster than MSRP. And we haven't seen a configurator level across the board MSRP reduction since April.
I guess my response is everybody knows that everybody agrees that costs are coming down quicker than selling price. But what people are looking forward, they're not looking backward. Okay. So what people are saying based on Elon's comments is the Fed is going to raise rates next week, and therefore Elon may use that as cover to bring prices down again. And look, I look at revisions. So when you see analysts who get paid to be right, okay, and sometimes they're not, but that's how they generate commissions, because they get ranked as, you know, a higher ranking analyst if they're correct. They're all bringing estimates down, right? They brought estimates down for auto gross margins for the rest of the year. They brought estimates down for 2023. They brought estimates down for 2024, even though you have all this good news. And what came across to most institutions, and I'd say it came across to me, is almost throwing out, well, we're in negotiations with some OEM on autonomy. It almost was like, well, why are you saying that? I mean, are you desperate? Are you know that there's like bad news here? Is that what you're trying to get people to believe? Because that's just not something you would bring out now. You wait until you're there and then you announce it. Again, given he did this a couple of years ago with Autopilot and said we're in negotiations, and I can send you the tweet if you want, that said we're in negotiations, and nothing ever came of it. So when people hang their hat on that, I'm just like, wow, that's like so pie in the sky that's a positive.
So how do you explain that some of the analysts increased price targets, and quite a lot actually, and quite of the prestigious ones, right?
Because price targets are something that, I'll give you a little secret, having been an analyst, you have to have some reason to increase your price target. You can't just say, well, I'm increasing because the price went up. And all these folks were asleep as the price went from 150 to 200 to 250 to 280, and they never increased their price target. So they were waiting until you got to earnings, and then they could say, okay, well, now I got earnings, and they basically used earnings as cover for increasing the price targets. But to your point, when I look at the estimates went down, and I just think it's crazy that some people came away from the call thinking this was a good call. It was a terrible call. It was horrible on so many different levels, and yet people got so excited about it because he said, well, we have an OEM in negotiation for our Autopilot. Read the Volvo CEO talking about it. He says, look, for charging, we have no problem with piggybacking on their thing, but if we're talking about a base part of the car, which is the brains of the car, which is the future value of the car being autonomy, we're not going to see that Tesla. So I just think that's not a positive. It might be a positive, but I wouldn't count on it. That wouldn't be a reason.
Do you see the potential business model of
Sure, but it's pie in the sky. It's like maybe. It's like Elon saying we're going to solve autonomy for the last 5 years. And so, yeah, I see the business model, but it didn't happen yet. It's just one OEM that he's talking to, maybe he had a phone call with, that he's basically taking credit on the call for saying, well, we're going to have it. We're negotiating a deal. He didn't say we're going to have a deal, right? So,
but do you see the reaction of the other OEMs? I mean, if you are now not this one OEM, maybe this one OEM doesn't even exist, but any of the others, thinking, wow, if really Tesla implements FSD and the operating system and the cameras and whatever has to go with it, we have to be there as well. The same way they finally came around for superchargers. Don't you see that?
Yeah, but charging is so different, Alexandra, than autonomy. Autonomy is a fundamental part of the car. All right.
Sure.
Charging is just charges. Like, think of your iPhone. Do you have a fundamental part of the iPhone, including the brains of it, the chips and everything, versus how to charge it?
Do you believe that GM wanted to admit that they need Tesla chargers?
No, but charging is not a big deal. Okay, this is what I keep saying to you. Autonomy is a huge deal, right? Autonomy is a huge value to cars, even Elon says, but charging is not. You can get charging anywhere. So I think they seeded the charging issue because they didn't think that was a fundamental part of the car to be able to plug into a supercharger by Tesla. And I know I'm going to get reamed for being this negative, because there are lots of positives. I'm just, look, I get paid for adding value for my clients. Okay, that's what I get paid to do. And when Tesla has a bad quarterly call, I got to call it out and say, this sucked and here's why. And I'm telling you why the call sucked. Okay, and you guys could say, well, it didn't suck because they had an OEM that they might have a deal with. And I'm telling you, that's not a positive. That's a maybe. And I would put it in, yeah, if it happens, you could see the value go up. And I've actually even tweeted about it, but you can't count on it yet. It's Elon trying to throw a prize out to the audience because he didn't do anything else. All he had to do to please institutions, and that's not his job, but all he had to do was say, look, margins have bottomed, we're in a deflate, and Zach said it, we're seeing deflationary commodity cost, And that's all he had to do is keep it quiet. But instead, he had to go into this, well, if interest rates keep going up, we're going to have to maybe cut prices again. It's like, why? Are you trying to, like, send a message to Jay Powell? Because if you are, he's not listening to you. He doesn't care what you think, And I just find it odd that was like a focus of the call.
Well, yeah, no, I think your perspective is very good in that. One, it keeps us grounded in what analysts are thinking, what you're thinking as well, and potentially, obviously, other analysts, right? I think one thing we all know is that Elon doesn't care what the analysts think per se.
Exactly.
So for him, I think, especially for him, like, especially on the Ford call, right? I think that one of the questions to Jim Farley was, hey, are you going to be using Tesla software? And at that point, that's where he started to kind of, I think, pull back a little bit and say, hey, no, I think we still have some good stuff to come. Like, we're going to hold out a little bit. The one thing I do want to say is that, it's one of those things for Elon. He thinks 5-10 years out, but sometimes he states it in a way where it's like 1 year out. But I think the reality is that no one is further on general autonomy. And I think when you think of like what this company will be one day, obviously we still know autonomy is one of the hardest problems to solve. This is still, they're years potentially out from fully solving this, if not longer. But the reality is that no one is solving general autonomy like Tesla. Like, I could be in Montana with 11.4.4 and turn it on and it can handle the streets. I can be in Miami, Florida, and it can handle the streets. And again, I'm not saying this thing's perfect yet, but no other company is able to do stuff like that. So they're the only ones. If you think about it, it's not like, imagine Ford coming to Cruise and saying, hey, I want to license your FSD for San Francisco. Okay, we'll hook you up with 8 blocks and then 4 streets. Like, that's all the conversation is. And that's why I think I understand what potentially the analysts wanted to hear and stuff like that. But I think that's, again, where just Elon just thinks he doesn't think in, the short term. He's always thinking the long term. And that's why this company has been able to solve all of these problems over the years. Like, imagine, like, in 2012, he's launching the charging network. He's the supercharging network. He's having all of these visions for other things. And so I think that's the big thing, is that good thing he's not necessarily looking at the short term, but he's thinking of the long term, because ultimately, like, when you think of like where this company will be 5 to 10 years, he's thinking of all of the potential roads that they can go down versus just like paving the road, right? He's just thinking like, these are all the places that we can be versus like. But yeah, that's just some of my thoughts.
I have a question for Gary on that, because I mean, analysts they're looking like a year out, right? Isn't it supposed to be like 12 months?
This is you guys got analysts wrong. Okay, they look at my models. I look out at 2030. I hate price cutting because to me it's a short-term way of goosing volume. Okay, I would prefer them spend, if they're going to spend $1.6 billion on price cuts, I'd rather them spend $100 million on advertising to build the brand. And that's the because you've never been analysts. They're not looking at short term. They're looking at present value of free cash flows out, to 2030 and then discounting it back. That's what I do. That's what analysts do. They're not looking at next quarter or next year. And everybody says, well, they're so short term and that's why they don't get it. That's a very demeaning way of looking at analysts. Again, I'm not a big fan of analysts, but don't just assume because retail investors look long term and analysts disagree with them, and institutions who also look long term, they don't disagree. I mean, they're looking long term as well. And so, look, with autonomy, if you can get that right and get it to be level 4, level 5, where you can actually get a higher take rate than 10%, because the market isn't paying for Tesla's FSD, then everybody would say, okay, this is worth a lot of money. If they can actually get to level 4, level 5, where the take rate goes through the roof and it's worth more than $15,000. But look at the resale value of EVs with FSD versus without FSD. There's very little difference. So the market is not paying for FSD yet. Now they may when it gets to be level 4, level 5, but just don't assume that analysts are looking short term. I don't look short term. I'm very much, let's go out to 2030. Let's look at earnings. Let's look at cash flows, come up with a value and discount it back. And that's the way most analysts think.
Well, think about the price sorry about that, Jeff, but think about the price cut in a different way. First of all, it it increases the number of cars and therefore potential FSD users. If your whole model is FSD based, which Elon's model is, more cars out there, better it is, no matter at what price they come. Remember 3 months ago, he told us even if it's at zero. At the same time, try to reduce costs, which they have now successfully done. I mean, there's no doubt that costs have come down more than I expected and really significantly. So if you consider that, I mean, I'm not an opponent of doing advertising, but 100 million of advertising may build a brand, but may also be forgotten 2 days later, right? Because once it's spent, it's out there. The car is on the road for 10 years and a potential money bringer for all the software that they're going to purchase on it.
Can we, first off, Joe, did you have a point because I had a point after yours.
I was one of the main things I think about with the price cuts, and I know Gary and the analysts, they might not like it, but when he said on the call that they do this because the Fed's raising the rates and it makes they're trying to make the car still affordable for people. Sure. I think that goes a long way with public perception of what the company's doing. And I mean, for me, being a retail investor, that to me signals why I back this company. That to me says why I'm behind Tesla, why I'm behind Elon, because he cares about the things that people aren't really thinking about. Like even you're not thinking about that, like even in this conversation. And that to me is huge. Like, you know what I mean? Like they're saying, you know what, we'll take the loss. We understand that you really want the vehicle. We'll get it to you. Even though they're raising your rates, we'll take that and we'll get you the vehicle. That has got to mean something. And the fact that it doesn't to analysts, I think is a problem.
Look, if he's trying to send a signal to customers, okay, just think about this. Listen to what you're saying. You're saying we may cut our prices if the Fed raises rates. And everybody knows, if you're reading the newspapers or paying any attention, the Fed is going to raise rates next week. So what are you going to do if you're a customer? If you're hearing we may cut prices again, you're going to wait.
Wait a week.
Let's wait. And so why is that smart to be telling your customers, hey, we're going to cut prices, so you might as well not buy today? But it could be 3 months because the Fed may signal.
Well, if it's necessary, then it will be 3 months. I don't think that's the real issue. Do you understand that you also kill the complete competition like that? Did you see what happened with Ford, who has to lower the prices on the trucks? That's a first. I mean, since I live in the United States.
Why is that good? Why is that good from a stock standpoint to have a price war when by lowering prices and then having everybody else follow?
Because you win market share. Because you win market share.
I don't even think that's the thing. I think they are selling so many vehicles, and that was your point about having FSD available and having so many intelligent vehicles on the road. I mean, just look at the numbers that they're doing. Like people, the same argument you're saying, Gary, people said when they were selling 50,000 cars, when they had Mobileye technology and they were just doing like 100,000 cars a year. People had that same argument. Now they're doing almost 500,000 cars a quarter. And it's still the same. I
didn't have that argument. That's BS. I never said that. I'm
not saying you specifically.
But I hate when people go back and say, "Well, people said this back in 2019." Let's focus on the here and now. Okay, here and now. You don't hear me saying that. You don't hear a lot of analysts saying that. So we're looking at FSD and saying, "Look, it's a good product, but it's not level 4 yet, where the car drives itself." So therefore, the take rate, which right now in the US is only like 12-13%, which means 88% of people are choosing not to pay $15,000. It's very hard in my mind, unless it gets materially better, where it drives itself, that you would actually put a value on it more than the take. Today, you'd put, the number of units times the take rate times $15,000. So are you really going to put, $100 or $200 of value of robotaxi in there because it may get to level 4 someday? Maybe, but that's not the way people are. That's not the way people think.
Can I respond to a couple of the points? Sure. So first off, I think Gary's encapsulating like a call management issue. Call you.
Okay.
Did my volume go?
No, you're
back.
You're back.
Oh, okay. Yeah, I think there's two separate things happening here. There's the management of a conference call and like, what do other auto peers do on conference calls, and do they signal things of the such like price cuts and so forth, and this back and forth with the Fed? Probably not. But now let's switch to, and I agree with that. I agree with that. But go to the facts now on FSD. If you're an analyst and you're not looking at the following things, again, what are the 3 things you need to do generalized AI? You need the talent, you need the data, and you need the compute resources. So let's not talk about the talent. We see what they're doing on the talent side. On the data side, they have 10 times the amount of miles than the next 2 competitors, and that gap is growing. So when we say that, is a Volvo gonna cede this to Tesla? The data says that they're going to have to do that unless they come up with a solution that's going to overtake Tesla in miles or even approach them. So that gap is growing in data. And then in compute resources, we see what they're doing right now in terms of procurement with NVIDIA, and then they're basically designing and building their own product. So at some point, if you're an analyst and you're looking in the future, you have to look at there's these leading indicators, and it's the data and the compute resources. Those leading indicators would indicate they're going to get to the finish line at scale faster than anyone else, including NVIDIA. So, I mean, those are the things that I would hang my hat on. And one other, it's just a minor clarification. The operating system of the car runs on, there's application silicon that runs on. Qualcomm makes it, other NXP, other manufacturers make that. We're talking about the full self-driving peripheral. That's an add-on. That's not the actual brains of the car. The brains of the car are shipped by other manufacturers, and Tesla has to me, they have the only global operating system for EVs. When you look at the software that you see in the car and the application layer, they have the only one. But I just want to make those points on data and compute, data and compute resources. The data says that they have a lead and the gap is widening. So I think they're going to be forced to do that at some point.
Look, and I don't disagree with that. Remember, Tesla's our number 2 position. And we own it because we think it's going to keep going up. I'm just pointing out that some people get too carried away and too exuberant on Elon's promises, which, he's been promising autonomy for 4 years now. It'll be the end of the year. And he's been saying that for 4 years. And he said it again, it'll be the end of the year. And this time, he almost made fun of himself, the boy who cried FSD, which is great, until I can see that and your points are well taken, that the product is so much better than what else is out there. I'm telling you, institutions, and maybe they're short term, but I don't think they're short term. They're not going to give Tesla stock price the valuation that you think it should be worth. And you're not seeing it in the retail price of FSD. You take a used Tesla with FSD versus without, you might get a $2,000 premium if you're lucky. So the market's not seeing it yet, and maybe they will, but it's not paying for it today.
But I think Gary, in that example, we're mixing present value and future value. That data, the miles, that's a leading indicator of who's going to get to the finish line on general autonomy. That is a metric you have to use. Otherwise, there's nothing else you can really go off of. Yeah. There's nothing else you can go off of.
And so about a year ago, I sat with Elon for 4 hours, and that was the one key thing he said, like Tesla being 0 versus like its current valuation and even, greater than that is FSD. So I think that's at least how he thinks, whether, the analysts agree with that or not. That's just for him. It's like, we're either nothing, or with autonomy, it's like everything. Right. And I think that's at least, probably where he's coming from when he's talking in those calls. But I understand how, potentially, the analysts, they want to hear certain things. I think the thing to remember too is that, as this company, at least my opinion is, as this company is lowering their costs, for the car, I think it's easy to forget that it's not like they're pulling demand forward necessarily. I mean, the demand for Teslas right now, I mean, there's really no other choice when you go buy an EV because of just the competitive advantages that this car has, right? Essentially, it's like, sorry to my Android friends, but, really when you go and buy a Tesla, you're buying an iPhone. You're buying the best phone, the best car on the market. Sure, you can go buy a cheapo like Samsung, not even the Galaxy one, the lower versions. and you're going to get a half-baked product. You're not going to get the full experience. And sure, I know, but yeah, so I think that's the biggest thing is that, even Business Insider, I was actually surprised that Business Insider wrote this. I posted the article yesterday that there is no better EV to buy today than a Tesla. And so I think that even if they are lowering it, because I think the reality is like, I was talking to, again, a legacy auto dealer the other day, and he was saying how much inventory they even have on gas cars now. And he's paying like 6% a day or some insane rate to just keep the car on the lot. And he can't move them now. He's actually selling lower than MSRP. So I think that that's the thing. It's like, we don't want Tesla in a situation too, where they're just sitting on all this demand to like keep a certain brand image when their goal is to get us to a sustainable future. And whether, I'm not always the biggest fan of like, some of those things where it means like opening up our charging network as a customer from a customer experience, but I have to be true to like, what's their mission. And so if they're going to lower the car by several thousands of dollars, it's going to unlock more, a huge demand lever. And I think that especially even at the shareholder meeting, he was like, Elon said, don't look at the stock price for the next 12 months because we have no idea what the headwinds are going to be because of this macroeconomic issues that we're having. So I think that's, at least for me, like when I think long term, I think yes, FSD continues to be promised. It hasn't been delivered yet. But I can see the progression because I've been driving it for almost 3 years, lapping October. I've been driving it for 3 years. Me and Raj were one of the first testers. And so I can see how far it's getting. There's still things that it needs to get better on. It's not great in like specific areas, like maybe like San Francisco but like when it comes to me going from like Pacifica, if you are from the Bay Area to like San Jose, that's over like 50 miles and it's going through streets. It's going through, sure, it's more suburban areas, but it's driving itself. So, and in those cases, it feels like autonomy, level 4, but it's not because obviously, it still needs my input and some of this other stuff. So I think that's at least, where he's thinking, but I can understand where if the analysts were expecting to hear more on the short term and more about like that, it's just unfortunately, like you're talking like he's never the same analysts back in the day were the same people, who were really doubting and putting a lot of crap on him and the company and pressure and stuff, right? Along with the short sellers. So it's hard for him, I think, to relate. And that's why he relates so much more to the retail investors because he feels that they can be a lot more forward looking. But yeah.
Can I just say one thing?
Yeah, of course.
Stop saying the analysts are looking short term. That's just not a true statement. You guys keep saying it in a very demeaning way. And nobody thinks that way. Okay. Everybody does. Let's look out 5, 6, 7 years, come up with earnings, come up with free cash flows. That's a long-term way of looking at things. And when people say, well, the analysts are just looking for short-term, pacifiers, it's just not true.
But why are you upset then about a price cut? I mean, if you look at 5 to 7 years, you shouldn't be worried about next month's or next week's price cut after the Fed raises rates. It's just, I mean,
you don't need it. If you're really selling all the cars you can produce, as they say, and there's really great demand, why would you be cutting price?
Well, because you're in a high interest rate environment and you tell yourself,
but interest rates are going to come down.
Well,
look, the way
not
right now.
Not next week.
Not next
they
week.
Just said
You're
it
right.
exactly. So they said if they don't come down quickly, we may have to cut in the immediate future. But that doesn't matter, and it doesn't matter.
Okay.
But let me get to my point. Is it really? I mean, I just think these analysts are hypocrites by saying they look 5 years and then they look to next week. But that's and I'm not saying it's you.
That's a retail investor mindset. Think about an institutional investor at Fidelity, and I was just up there 2 days ago. Okay, or at T. Rowe Price. They're not looking at next quarter. They think like retail investors. They go out many, many years. And to think that if I'm Ron Barron, who's an institutional investor, that he's looking at next week or next quarter, that's just naive. And I think a lot of retail investors are very naive about it.
And he's not complaining about price cuts, right? Is he?
I don't think he likes it. I don't think any institutional investor, if you've got, this is what they should have said on the call. They should have said, we're seeing deflation in commodity costs, and therefore we may bring prices down as commodity costs come down. Everybody would have been cheering for that. Okay. But because he tied it to interest rates go up, that's what people got. Wow, that's really, that makes no sense.
That brings me
Because
to my
interest rates
point.
will come down. Interest rates are going to come down later this year.
We've had this discussion before, and I think John put it very, very well. Elon is not addressing the audience that you guys are, you analysts, financial markets, whatever. He is talking to the retail investor. He's talking his mind. He's explaining his vision. He is out there sometimes a couple of years, certainly not good in timing, but that's not his thing. So my solution for the last 18 months, I've been screaming that whenever I was asked or not, was that don't let him do these earnings calls. These earnings calls are something that Wall Street needs, that the SEC mandates, and that is obviously addressed to stakeholders who don't have the best interest of Elon in mind, right? They go in there with a certain agenda or with certain questions, and he's not prepared to give these answers. So I think we should just separate the two and give Elon his platform. He has bought 44 billion. He can go on space. He can do whatever he wants whenever he wants to talk to the people he wants to talk to, and let the people that are in management talking Wall Street, the Zacks of this world and the Drews of this world, handle this, and then you get your wording and you get your tick boxes and you get your, the answers that you are looking for.
You're so derogatory about it.
But the funny thing is, if Elon disappears, people are going to be like, "Oh, he's not the leader of the company." So it's just like,
as Alexandra will say, I've been a very big fan of Elon being on the calls.
I know.
I've always been very supportive. I like hearing CEOs talk about the vision, talk about the product opportunity, talk about the competition.
Don't we all?
I enjoy that. Okay. But I don't think just taking him off the call is going to solve anything, right? If it's the mindset of the company that they should be cutting price because interest rates are going up, that's causing the stock and earnings estimates to go down this week. Okay. That's what people are, I don't say upset about. They just don't understand it. It just doesn't make sense to people. And so my question is, okay, let's suppose interest rates go up next week and then the Fed starts cutting rates in September. Okay. Does that mean they're going to take prices up because interest rates are now going down? And that means the payments are actually more affordable?
That's what they did. That's what they did during COVID, right? Remember? They did. The prices went up.
That was because costs were going up because you couldn't get, there was cost shortages. That's fine. That's margins. Okay. So if you tell me that costs are going up, therefore you should take prices up, everybody will say, okay, that makes sense.
But you do understand that 80% of cars, including Teslas, are financed. And so for the end consumer, interest rate is a major element in their buying decision, right? If they suddenly have a higher monthly payment, they may or may not buy the car. So interest rate it may not be
doesn't change their P&L, doesn't change Tesla's P&L. So you got to remember forget the Wall Street analysts because a lot of them are dopes, and I agree with you there. But think about a Fidelity or
now we get to the real.
They're institutional investors. They own it based on a long-term view of what Tesla's valuation is worth. And if the price is below it, they own it. Okay. The problem is when Elon starts talking about, well, gross margins may come down some more, then, the valuation they're putting on it's going to be worth less. And everybody's happy that Tesla stock is up so much this year. And, I think what I'm surprised by is that people are reacting to the price being down 10% in the last 2 days and saying, why? It was a great call. And it's like, it wasn't a great call. Stop saying it was a great call. It was a terrible call. That's what I'm reacting to here. I don't see why anybody thought it was a great call.
I think we're all the way back to, I don't know, the price of 10 days ago. I don't overreact to that as much as I think there's a narrative that they're building. It's based in reality. Number one, from a hardware gross margins perspective, they're basically saying that they've troughed. They've been able to decrease prices faster than MSRPs, and it looks like from a procurement or supply chain perspective, they now have the number one model that's built in the auto industry. So any auto supplier in the world, any auto factory in the world, there's nothing that gets built more of than a Model Y part or a Model Y full assembly. And that is massive supply chain leverage. It's not, you don't get leverage with the supply base by just building 500 different models like some of the other OEMs do. You get real cost leverage with them by having these small number of models. I think they're starting to reach escape velocity on hardware, and this SKU this Model Y SKU is going to tail right into the Gen 3 SKU and which is going to be even much higher. The second thing is it looks like they're reaching escape velocity on miles driven, which is the big race in AI. And I think those were the two narratives I honestly took away from the call. And I understand there's things you say and things you don't want to say that on a particular call. And it's more of like, what's the audience and are you hitting, to Alexandra's point? But I think they're reaching literal escape velocity on hardware and on AI. And I don't know how else you have another takeaway.
They should say that, and then that's they should be focused on rather than tying it to interest rates going up. Because I agree with your points.
Yeah, I think this was a lot of good discussion on the earnings call. I thought obviously one thing that wasn't really discussed on the call was the Cybertruck production. So I'll kick it to Jeff, but I wanted to just quickly show like this is something that we all happened literally I think at like 1 a.m. I don't know if they were just up still. They took a photo of like the first produced Cybertruck. We're all waiting for this. We're all excited. This has been almost a wait of 4 years. So I'm really excited. But Jeff, I know you had some thoughts on this.
Yeah, and I've been in a couple of different forums where there's not a really good understanding of what a release candidate is. And I wanted to spend 30 seconds on defining what a release candidate means, because I think it'll be helpful for people. They're like, what does this mean? What did they show us? What they showed was what's termed as a release candidate. And what that means is they believe everything on that car is production worthy and could be handed over to a consumer, but they have a list of tests that they still need to complete that they're doing in parallel. But what I believe is happening is that they are ramping their entire electrical supply base and really all their inbound mechanical parts, unless they have some small issue here or there. But I believe that their supply base this is what I believe. I'm not saying I'm speaking on behalf of the company, but from managing this type product ramps before, I believe their supply base is in mass production. I believe that as long as that car does not have any critical failures found in testing, which you don't get to release candidate if you think you have this big list of issues, then that car will actually turn into a production worthy vehicle. And then they'll just continuously go into production, and they'll change the terminology from release candidate to pilot or pilot production, and then from there they just go into production. So I view that photograph and that terminology as they've reached another stage of maturity, and they're basically within shooting range of just basically starting continuous production as they complete this list of tests that are needed.
Hey, Jeff, how many given what you just said, and that's very helpful, how many vehicles do you think they can produce in the third quarter in order to release them to potential customers? Is it 10? Is it 50? Is it 2,000? I'm just curious.
Yeah, I mean, I think, we don't know the individual velocities of the stations on the line. We don't know what rate they're running at. But certainly they have the ability to produce, hundreds. I think they have the ability to produce hundreds of cars. It's a question of, are there any open issues on that list of tests that they're running that would say, well, let's wait a little bit, because maybe, we don't need to do it right now. We don't need to, bend a bunch of metal and get everything. We want to get through these final tests, and they may have some tweaks. These tweaks could be at the factory level, not back in the supply base. So it depends also where they feel the remaining open risk is. I believe right now what they're doing is they're ramping their supply base, and they have a confined open list of issues that they're engineering issues and supply chain issues that they're working through to solve, to say, all right, this goes from release candidate to full-on production. But yeah, I think they can build, several. That's why you're starting to see, as John indicated, many cars together on the road, and this is also a good sign that they're putting more and more of those out. So it's really going to depend on that list of issues and where they're at. But I view it as very favorable that this is a release candidate. Some people were saying like, oh, this isn't like, this is something like, no, they believe it's production worthy. They just need to complete their list of testing that they need to do on the vehicle.
So all the Cybertrucks that you're seeing on the road are actually made on the assembly line using the same production process that once they're mass producing, it's the same. You're just doing it real slow right now because you're trying to make sure that, you don't have any issues, to use your terminology. Is that correct?
Gary, I don't know which ones we're seeing on the road. I don't know if they're hand built or I don't know if they're off
Okay.
that line. The only one we know, is the one that came off the line. The other ones, they're getting wraps and they're doing all these other things. By the way, I sent a tweet out on the wraps. I think they may be signaling something, that they're either going to offer an OEM process or they're going to partner with a company that can do this across the country. I don't think they would be doing this pre-production if it was just, anyway, I think they may be signaling something there around personalization, which is a
that's huge,
very high gross margin business.
Yeah.
One thing we do know that they've alluded to, I can't even remember where, but I do know that their accessories that they're building for this company are for the truck are very exciting, and something that they're very excited about. Obviously, we know that they're not going to build like an RV or some of this other stuff. But the amount of accessories and things like that that they're building for the truck, again, outside of like the wrap and all that other stuff, I know is going to be really exciting and something that I think they're really excited about.
Yeah, I'll just tell you, in mobile phone world, like when we were, you would be targeting somewhere in the 20 to 30% range on the actual phone itself, or some range there. But on the accessories, you'd be doing 40 to 75% gross margin on the accessories.
Yeah. Look, Porsche for years has charged, if you want a custom Porsche, they've for years charged $6,000, $7,000, $8,000 for custom paint. And I've talked to people what it costs them. It costs them like $2,000. So to your point, the incremental margin on being able to wrap in a certain, color scheme or design or whatever, that's huge if they can pull it off. So I'm all for that.
So I thought we could end today. There has been obviously a lot more news, but I thought we could end today potentially on guesses on the Cybertruck pricing or thoughts on this. As we know, I think Elon did comment a little bit about, even after these price cuts happening, he said the Ford Lightning is a good vehicle, just somewhat expensive, especially given the high interest rates for any kind of loan. So obviously, we know the way Tesla has worked with the launch of pretty much all of their vehicles has been the highest trim first, and then they work their way down. So even though people have, even if they're reservation number 5, but they ordered a single motor, they probably won't get it for maybe a year and a half. But I would love to get your take on everyone's take on like pricing or where we see that going.
Yeah, I don't think they're going to be doing the most expensive 500-mile range one first, because I think just like what you said about the Ford thing, I think that holds true for what they're trying to do, and what Gary was alluding to is that they are just trying to get the vehicles out. And I think the quickest way for them to do that is probably dual motors at like a mid range of like 350 to 400 miles of range or something like that. And I see that being like easily maybe 5 to 10 grand above what Model Y is right now. So probably 60.
Yeah, I think it's important that I get the 7,500, so way below 80,000. And exactly. And the other thing I wanted to point out for all those that gonna use the car professionally in the United States, which is obviously the initial market, there is this write down of, I think it's 29%. So this is gonna be a good workhorse deduction and make it really attractive in the first year.
So I think the reason I think you start with your most powerful and your highest trim units, because you want really favorable reviews. You want this to get out there, and especially the pickup guy or girl, they want them to write very favorably about it. So I agree with you, Alexandra. I think you're going to have we'll call it it's not the dual motor, but let's say the tri-motor, the quad motor, I guess it is. Now they're calling the most expensive one. They'll get that out because that's going to be the fastest, it's going to be the most powerful, and you want pickup owners to all say this is like the greatest thing out there. So I agree with you. I don't think you start with the single, what's it going to be, a dual motor. I think you start with the kind of the middle one and the most expensive one. And so I would think, you'll be in the 49.9, 59.9, 79.9 camp. And I think they're going to want to get them all to stay under that $80,000, IRA limit. But I agree with you, the 59.9, if that's, I don't know what you call that now, the tri-motor, because you're going to start with the dual motor at the lowest. I think that's going to be their horse product. That's going to be the most dominant part of the franchise, the Cybertruck franchise.
Yeah, and I agree. They'll start. I agree with that range, and I think they'll announce all the price ranges, but they'll start building the higher end config. And the reason is that will be the highest gross margin configuration for them to build at the lowest velocity,
Right.
which will allow them to expose all of the issues in the factory. And then basically what they can announce to the public is and say, look, this is our pricing. We're going to start here. And as we scale volume, the price variance, the lower price variants are going to become more available and potentially even more competitive prices.
Yeah, that's how they've done. Go for it, Gary.
What's the timing? What's the timing you think that they're going to start delivering? Because some people say third quarter, some people say fourth quarter.
They didn't give any updates in the call, but they've kept alluding to Q3. So I'm expecting something probably mid to late September, probably before Q4 ends. But even if it's a kind of like what they did with the Semi, even if it's kind of like a celebratory event that they send out the first 25, I think that's going to happen this quarter. But ultimately, I don't know.
Well, I think
updates are volume.
Yeah, I think it's got to be November because that's the Blade Runner date. So I think they're gonna. I think that's why they did it in November initially. No, I'm being honest. I think they're gonna stick with November for the Blade Runner thing, just like they did when they launched it, when they announced it.
Yeah, there was something I think I caught on the call, which was it wasn't necessarily definitive about Q3 or even a Q3 event. He said later this year.
Right.
It will be in production. So, Joe may be right with so we'll see. I think, again, they're working through this small problem list. You're going to see more of them on the road. And here's from what's material. Is it going to be 3,000 of them this year or 8,000 of this year? I mean, it's going to be something, I think a small number, in that range. Going to I think it'll take them about a year to get the peak run rate, whatever they set their peak run rate at. And I'm estimating we'll see. They could possibly do it much faster. But if you look at prior vehicle ramps, we'll see. They did engineer this, so once they get through this problem list, I actually think they can run their stations and they can actually go at a much steeper ramp curve, which with the way they designed the vehicle. So we'll see.
Hey Jeff, can I ask you a question? So if you look at Model Y was launched in first quarter of 2020.
Yeah,
and I think there was about 80,000 or so delivered that year. And then the next year they got up to 400, which is 2021. And here, so you're going to, let's say third quarter, fourth quarter, the street in its wisdom is only looking for about 100, no less than that, 90,000 in the first year. And in the second year, only 150. So versus 400 for Model Y. So, and you've had, as you know, Tesla's telling their suppliers 375 is kind of a run rate. So let's suppose you go to year two. Where do you suppose they can work out all the issues? Year two would be what, 2025. Where do you think the production of this thing could be? Let's say 12, 18 months from now. Run rate.
Yeah, I think it'll take them a year to get to whatever they set their peak tooling capacity at. So let's say it's 375. I mean, in other industries, it can be done much faster. And with the Model Y, there was a high reuse with the Model 3, and the Model 3 was already at a significant run rate at that point. So we'll have to see. I think this product has a mix of high engineering complexity, but I also think that they've also engineered it from a DFM and from a supplier perspective to actually produce high yielding parts. But I think the short answer to your question is let's say they're at the 375K per year run rate. That's what's that, about 30,000 or so a month, a year from now. So I think a 90,000 number is a really small number for year one, in my opinion. I think they can do more. I think it's going to depend on they would, if they find any issues, right? And when they start getting small volume vehicles out, that could be one concern where they would slow it down. But otherwise, I think they could do much better than the 90.
I mean, if you can do 375 in year two, that's way ahead of what people on the street are looking for. I mean, like 200
in 2025. Yeah.
The street's looking for 160, if I remember correctly.
Awesome. Well, I know we're a little bit over time. So I just wanted to do a couple of two things and then obviously thank everyone for their time. So as we know, Tesla Malaysia just launched this past week. So obviously that's a huge deal. And then I wanted to end with the Tesla Takeover. So I think it looks like Gary may have stepped out. But so the Tesla Takeover is coming literally next weekend, July 29th through the 30th. Gary, Alexandra, they will be speakers on different topics. So make sure you check it out. TeslaTakeover.com. Think it looks like Gary is back. But yeah, so if you're available to come, San Luis Obispo, make sure you're there. It's going to be an amazing day. We've already sold over 1,250 tickets. So we'll be probably getting close to 1,500 by the time, it's all said and done. So, but it's going to be an awesome day. So make sure you come out to that. And then I really just, again, wanted to thank all of our hosts and panelists, special guests that came out today, specifically Gary Black. Thank you for all you do. I think it's really... Thank you for coming on these. Obviously, it's not like you're, opposed to getting on calls where people have different opinions and takes. So thanks for hearing us out, even though we're all like, I guess, in La La Land. But,
loving it, right, Gary? Oh, he's not hearing us anymore.
Yeah,
we can say anything now.
Okay, so I guess
say nice things about you, Gary.
But yeah, so either way, Gary, thank you for your time today. We really appreciate it. Alexandra, as always, we appreciate you. Looking forward to hearing you speak as well next year. Next week, not next year.
Yeah.
And then Jeff, thank you for all of your wisdom, especially on the supply chain stuff, especially, on the ramp of this Cybertruck and whether, what this Cybertruck, the first one, really means. So that's huge. And then obviously, Joe, thank you for being an amazing host this week. And then also too, for preparing the deck. But yeah, so make sure to give everyone a follow, check out the description. One call out too, we will not be having a Tesla Beat podcast next week because we will all be boots on the ground preparing for obviously the largest community event in North America, if not the world. So we won't be here next week, but we'll be here the following week. So just a quick call out. But yeah, make sure to give all of our hosts and special guests a follow. Link is in the description or in the Twitter handles. It's everyone's been tagged, but we thank you for everyone coming this week.
Thank you, guys. Thank you, Gary.
Thanks, John. Thanks for hosting.
Thank you, Gary.
Thanks, Gary.
Thank you.